Hello and welcome to Investment Insight. Before we begin, make sure to subscribe and hit the like button. Now let's break down what's happening in the markets today in a clear and simple way.
Yeah, we have a really fascinating one today.
We really do. Because, if you look at the headlines recently, especially around the robotics market, it is just, it's wild.
It's completely saturated with hype right now.
Right, so our mission for this deep dive is to kind of cut through all that noise for you.
Yeah.
We want to decode the actual supply chain, figure out where the real money is flowing right now, and then look at this huge geopolitical curveball from the U.S. government that just completely shook up the global investment landscape.
Because if you just read the surface level reports, you'd think we're living in a sci-fi movie already.
Exactly. According to recent data, we're seeing these astronomical figures out of China, just massive numbers.
Yeah, recent analysis of Chinese state media, like CCTV, they were highlighting this brand new humanoid robot that supposedly got over 10,000 orders in under a month.
10,000 in a month.
Right. And alongside that, you have a major motor manufacturing company reporting a backlog of 1 million orders.
A million.
Yeah, 1 million. And then if you look at the macro data from China's Ministry of Industry and Information Technology, their reports show the robotics sector's revenue topped 90 billion RMB.
Which is what, like 12 billion US dollars?
Roughly, yeah. And that's just from January to May of 2026. It's a 26.9% increase year over year.
Okay, so hearing those numbers, right, your immediate assumption as a beginner investor is like, oh, wow, the robot revolution is here.
Right, like the factories are already just full of androids walking around.
Exactly. But we need to apply some basic supply chain logic here. Let's unpack this. Because if I tell you that I just sold 1 million car parts, well, that doesn't mean I sold 1 million cars.
No, not at all.
Right. So when we look at this 1 million order backlog, what are we actually looking at?
So this is where it gets really important to read between the lines, that 1 million backlog. It's for a very specific component called a frameless motor.
Okay, a frameless motor.
Yeah, it's not a fully assembled walking, talking machine.
Right.
A humanoid robot requires an incredible amount of actuator density to, mimic human movement. It needs a massive number of joints just to balance and reach for things.
So it's the elbows, the knees, the shoulders, all of that.
Exactly. So if we assume one sophisticated humanoid uses, anywhere from 20 to 40 of these frameless motors.
Wait, 20 to 40 in just one robot?
Yeah, easily.
Yeah.
So that 1 million order backlog suddenly translates to maybe, 25 to 50,000 actual robots?
Wow. Okay, so the math changes completely.
Yeah.
50,000 is a huge drop from 1 million.
It is. And honestly, assuming every single one of those frameless motors is even going into a humanoid is a massive leap.
Oh, because they're using other machines.
Right. Those same motors are critical components in standard collaborative robot arms on assembly lines or automated guided vehicles that move boxes in warehouses.
Ah, I see.
Yeah, or even traditional CNC machines. So translating a raw component backlog directly into finished consumer product sales, it drastically inflates what people think the current humanoid market actually looks like.
Okay, so that handles the 1 million motors. But what about that other headline? The 10,000 orders for a new humanoid in just 1 month.
Yeah, that one is, it's another classic example of hype.
Because as an investor, you really have to differentiate between, like, a guy clicking pre-order on a website with zero money down versus a factory manager making a serious capital expenditure.
Exactly. A real corporate order involves serious contracts. Unless a report explicitly names the corporate client and, details the cash deposit and the cancellation penalties.
Then it's basically just a wish list.
Pretty much. We have to assume the vast majority of those 10,000 orders are just non-binding letters of intent.
So who is actually placing those kinds of soft orders then?
It could be anybody. Local exhibition halls, university research labs, or even just local municipalities trying to boost their tech portfolios to look good.
Right, they want to say they're investing in the future, but they aren't actually putting down hard cash.
Exactly. And to treat those figures as guaranteed future cash flow is just incredibly dangerous for an investor.
Because genuine revenue means the thing actually has to be delivered, right?
Delivered, installed, integrated into the client's existing software stack, and thoroughly inspected. The final payment doesn't clear until all of that is done.
Right, a speculative wish list on a website doesn't keep the lights on.
It certainly doesn't generate shareholder value.
Okay, so if humanoids aren't actually flying off the assembly lines in the millions, and these massive order numbers are mostly just components or like speculative pre-orders, we have to ask, where is that $12 billion in revenue actually coming from?
Right, the 90 billion RMB. It's a real number, but it's not coming from humanoids.
It points directly away from the shiny viral tech demos on social media, right?
Yeah.
And straight toward the unsexy reality of the factory floor.
Yep. The vast majority of that revenue is generated by traditional industrial automation.
Right. I like to think of it like cars. Humanoid robots, they get all the media attention, the viral videos, the hype. They are the flashy concept cars at the auto show.
I love that analogy.
Yeah. But the industrial robots, the massive mechanical arms spot welding the car frames, the automated carts moving heavy pallets, those are the reliable pickup trucks.
And the pickup trucks are the ones actually working the fields, getting dirty, and generating hard cash.
Exactly.
And the production data supports that conclusion perfectly. Because if you look at the first half of 2026, Chinese manufacturers produced over 537,000 industrial robots.
Over 500,000.
Yeah, and that represents a 28% jump from the previous year.
That's a staggering volume.
It really is. And it all boils down to a very simple calculation that basically governs every factory on Earth, which is return on investment, or ROI.
Right, ROI, the bottom line.
Exactly. For a facility manager to justify replacing a traditional industrial robot with a humanoid, the overall hourly operating cost of that humanoid must be lower.
And calculating that hourly cost, that goes way beyond just the initial sticker price of the machine, doesn't it?
Oh, absolutely. You have to factor in the monthly software licensing fees, the salaries of the specialized maintenance engineers who have to fix it, the degradation and replacement of the battery packs.
Because batteries aren't cheap.
No, they aren't. But the most expensive metric of all is downtime.
Ah, right. If the machine stops working.
Right. An industrial robot arm is bolted to the floor. It executes one highly structured, repetitive task with near-perfect reliability.
It just does the same weld thousands of times a day.
Exactly. But humanoids, by their very nature, they're trying to be generalists. They are trying to walk around and do multiple things.
Which means they're currently struggling to match that hyper-focused reliability.
Yeah, and the battery life, too. That means the massive cash flow driving the sector right now, it's coming from auto manufacturers, battery plants, and electronics foundries who are just choosing to upgrade their proven standard automation systems.
They're buying better pickup trucks, not concept cars.
Exactly. And another major structural factor driving these numbers is China's transition from the electric vehicle boom directly into this robotics boom.
Oh, this is fascinating. Tell me more about that.
Well, over the last decade, China has built out this massive, highly efficient supply chain for EVs. They have these gigafactories designed to just churn out advanced lithium batteries, sophisticated electric motors, lightweight metal casings, all at incredible speeds.
Right, they mastered the manufacturing of complex tech hardware.
Exactly. But as the EV market is now facing, overcapacity and these intense price wars, those same factories are simply retooling.
That makes total economic sense. If you have a facility that was stamping out aluminum parts and winding electric motors for an electric sedan, you can easily just pivot to producing the structural chassis and the actuators for a robot.
Right. They are applying the brutal manufacturing efficiency and the sheer scale they learned in the automotive sector directly to robotic hardware.
And that pivot just makes them an absolute powerhouse in hardware production.
It really does. The scale at which they can manufacture these components is driving the global price of robotic hardware down exponentially.
But here's where it gets really interesting for you as an investor. Recently, a massive external shock hit this market, and it entirely altered the calculus.
Yeah, this was a huge curveball.
Right. On July 28, 2026, under the current Trump administration, the U.S. Federal Communications Commission, the FCC, announced severe restrictions on the import and sale of new Chinese humanoid and quadruped robots.
The quadruped models being those robotic dogs we constantly see going viral online.
Right, exactly. And the ban cites national security concerns. They're specifically focusing on the risks of mass surveillance, potential data exfiltration, and the fear that these camera-equipped, sensor-heavy machines could be remotely controlled by foreign entities.
And that regulatory move, the landscape just underwent a seismic shift overnight.
It's massive because when you look at current market share, Chinese firms like Agibot and Unitree absolutely dominate the hardware side.
They do. Recent data indicates China has over 400 distinct humanoid models in various stages of development right now.
400? That's insane.
It is. And they manufacture roughly 70% of the global supply of those quadruped robot dogs. They basically lead the world in producing affordable, highly capable robotic bodies.
Which introduces this really fascinating contradiction. Because when we look at American research labs, university programs, and even massive tech companies like NVIDIA.
They've actually been relying on these cheap Chinese robot bodies.
Exactly. An American startup will buy a robotic chassis from a company like Unitree for, I don't know, maybe $15,000. And they use it as this affordable physical test bed to train their own cutting-edge American AI models.
Right, the hardware is just a cheap vessel for their software experiment.
But by banning this cheap hardware, we are suddenly forcing American developers to purchase domestically produced or allied-produced chassis. And those might cost $50,000 to $100,000 instead.
Which is a huge jump.
So doesn't that drastically increase the cash burn rate for American startups? Doesn't it severely throttle the pace of our own domestic software innovation?
Well, the friction created for American research and development is undeniably real. The cost of entry for a robotics software startup here just multiplied overnight.
It's a huge hurdle.
It is. However, if we're looking at this purely through the lens of market analysis and economics, trying to stay totally objective, here we are basically witnessing the forced bifurcation of the global robotics industry.
Meaning it's splitting in two.
Exactly. The market is splitting into two parallel competing ecosystems.
You know, if I'm building a portfolio today, this looks identical to the split we saw in the 5G telecom infrastructure market a few years ago. Or even what we are currently navigating in the semiconductor fabrication space.
That is the exact right framework to use. We are no longer investing in a unified global market where everyone uses the same hardware and software.
So what does that look like in practice?
Well, on one side of this divide, you have the Chinese ecosystem. They will likely continue to dominate low-cost, high-volume manufacturing.
Right, using those repurposed EV factories.
Exactly. They'll supply their massive domestic industrial base and export aggressively to emerging markets in Asia, the Middle East, and parts of Europe that, choose not to adopt the U.S. restrictions. They will just win on raw scale and aggressive pricing.
Okay, and on the other side?
On the other side, you have the U.S. and allied ecosystem. This market will be defined by significantly higher cost hardware, but it will be highly secure, heavily regulated, and deeply integrated with premium, state-of-the-art American artificial intelligence.
Okay, so given this global split and the reality that building the physical robot is becoming cheaper and faster due to that EV supply chain, we have to figure out where the ultimate profit pool is actually going to settle.
Right, where is the real long-term value?
Because if hardware is rapidly becoming a commoditized product, the companies making the real sustainable wealth won't be the ones bending the metal.
No, they won't. Because the true bottleneck in the industry, the element that is exponentially harder to solve than just mass production, is software and reliability.
So let's talk about the components for a second before we get to software.
Sure. In the short term, the companies experiencing massive revenue spikes right now are the specialized parts suppliers. We discussed frameless motors earlier, but you also have things like precision reducers.
Okay, for our listeners, a precision reducer is essentially a highly advanced gearbox, right?
Yes, exactly.
It takes the high-speed rotation of an electric motor and converts it into the slow, incredibly powerful, high-torque movement needed for a robot arm to, say, lift a heavy object without just stripping its own gears.
That is the perfect way to visualize it. And then you also have things like force torque sensors.
What those do?
They basically allow the robot to physically feel resistance, so it knows if it's crushing a delicate electronic component or if it's dropping it.
Oh, that's crucial.
It is. Every robotic startup in the world currently needs these specialized gearboxes and tactile sensors just to build their prototypes.
It's the classic strategy of selling the pickaxes during a gold rush.
Exactly. The companies providing the foundational tools are making a fortune right now.
But history shows us that hardware margins eventually collapse. I mean, we watch this happen in the solar panel industry, right?
Yeah.
And we're watching it happen with electric vehicles right now.
Yep. Overcapacity leads to brutal price wars. And the cost of those precision reducers and sensors will inevitably plummet.
So the long-term value capture shifts entirely to the software layer.
100%. We touched on the concept of reliability earlier, but we really need to quantify why it is so difficult.
You do it.
Okay, so if a humanoid robot on an assembly line has a 99% success rate, that sounds excellent in a consumer context, right?
Sure, an A+ in school.
Exactly. But in modern manufacturing, a 99% success rate is catastrophic.
Because if a robot is performing a task 1,000 times a shift, a 1% failure rate means it drops apart or misaligns a weld, or trips over a cable 10 times a day.
Right. And a single dropped car door can force the entire assembly line to halt while a human operator has to safely enter the workspace to clear the jam.
And when downtime costs tens of thousands of dollars per minute, a 99% reliable robot is just an absolute economic liability.
It really is. Bridging the gap from 99% to 99.999% reliability, that is the hardest engineering challenge of the decade.
How do they even solve that?
It requires foundational AI models that utilize advanced spatial computing. The robot has to be able to process a constantly changing three-dimensional environment in real time.
Right. The factory isn't static.
Exactly. It
Yeah.
needs to run millions of edge case simulations
Right.
in the cloud. It's constantly calculating what happens if the lighting changes suddenly, or
Yeah.
what if a tool is placed 2 inches to the left of where it should be.
Or what if a human just walks into its operational radius?
Exactly.
But how does a software developer even begin to train a machine for every random occurrence in a busy factory? You can't code for every single possibility.
No, you can't manually code it. They do it through synthetic data and massive simulation environments.
Synthetic data.
Yeah, the AI models create thousands of virtual factories, and they force the virtual robots to perform tasks.
Right. I mean, the companies that achieved trillion-dollar valuations over the last decade, they weren't necessarily the ones just assembling the glass and the aluminum.
No, the generational wealth was captured by the companies controlling the app store, the operating systems, and the data that flows through the devices.
Because software scales infinitely,
Right.
with near zero marginal cost.
Exactly. Delivering an over-the-air update that teaches a robot a new welding technique requires no steel, no shipping containers, no factory floor space.
It's just code.
It's just code. So the companies providing the underlying robot operating systems or those foundational AI models that allow a machine to learn a task through simple observation.
Or even the remote fleet management software.
Exactly. All of that.
Yeah.
Those platforms will capture the vast majority of the industry's profit pool as the hardware becomes this cheap, interchangeable commodity.
So, as an everyday investor listening to this, trying to get smart on this sector, you don't necessarily want to bet your portfolio on which manufacturer builds the shiniest metal arm.
No, you want to identify the company whose proprietary brain is running inside a million different metal arms, regardless of which factory in the world stamped the steel.
By focusing on the invisible infrastructure, you're aligning your investments with the most defensible, high-margin aspect of this whole robotics revolution.
That's exactly right.
Well, we have covered a massive amount of ground today.
We really have.
Being well-informed in this space means looking past those sensational headlines screaming about 10,000 robots sold in a month. You have to look at the unsexy realities of the component supply chain, like the frameless motors and the precision reducers we talked about.
And you have to monitor the geopolitical chessboard.
Yes, specifically how those FCC restrictions are actively splitting the global market into two distinct parallel ecosystems. And most importantly, you have to follow the actual cash flow. Today, the money is generated by traditional industrial automation, those reliable pickup trucks on the factory floor. But the future wealth, that is going to be locked up in the software, the operating systems, and the spatial computing AI models that make these machines truly reliable in unpredictable environments.
It's a huge shift in where the value is.
It really is. And as this dual ecosystem world develops, I want to leave you, our listener, with one final provocative thought to mull over. Our entire discussion today centered on the factory floor, the warehouse, and the assembly line.
Right. Yeah, industrial applications.
But think about what happens when these advanced humanoid robots inevitably make the transition from industrial facilities into our living rooms.
Oh, that's a whole different ballgame.
It is. If a decade from now, a robot is cooking your dinner, folding your laundry, and walking your dog, you're just purchasing a fancy household appliance. You are buying into a massive, deeply intimate data ecosystem.
Because they have to map everything to function.
Exactly.
Yeah.
These machines will map every square inch of your home. They'll learn the daily routines of your family, and they'll record almost everything you do.
It's a lot of trust.
It is. So the ultimate question isn't just who manufactures the cheapest hardware. The real question is, who will you trust to write the code that lives inside your home?
That's something everyone should be thinking about.
Absolutely. Well, that's all for today. Don't forget to subscribe and hit that like button.